Hello everyone, welcome to my channel. Today I'm going to talk about how Bitcoin is taxed. Before I get into the video, be sure to subscribe and leave a comment below saying I subscribed. I will try to personally reply to your comments. In 2014, the IRS has ruled that Bitcoin and other convertible virtual currencies must be treated as property, not as currency. There are therefore tax consequences whenever Bitcoin is bought, sold, or traded. This might sound like a minor distinction, but it's not. It determines how Bitcoins are taxed. The information you will need to make sure your taxes are calculated correctly and what tax planning techniques you can use to try to minimize your taxes on Bitcoin transactions. The IRS and virtual currency. The IRS has indicated that virtual currency does not have status as legal tender in any jurisdiction. It's referred to as convertible virtual currency if it has an equivalent value in real currency or if it ever serves in place of real currency. It can be exchanged into another currency, either real or virtual, and it can be digitally traded. When do you have to pay taxes on Bitcoin? The IRS further indicates that Bitcoin is treated as property and is subject to general tax principles. You must include in the fair market value of the currency in US dollars in your gross income if you are paid in Bitcoins for goods or services. Transactions used in virtual currency should be reported in US dollars. The fair market value of Bitcoins can be established by converting them into US dollars at the current exchange rate at the time they are received. You will also have a capital gain or a capital loss if you dispose of Bitcoin because it's considered property for tax purposes. A gain represents income, and income is taxable even if you are paid in virtual currency. Every Bitcoin transaction is taxable, writes Tyson Cross, a tax attorney who specializes in virtual currencies. Bitcoin users will have to calculate their gain or loss every time they purchase goods or services with Bitcoin. As with other types of property, you would acquire it first, often by exchanging cash for the asset. You then own the property for a period of time and you might eventually sell it, give it away, trade it, or otherwise dispose of it. Capital gains taxes come due at this point. Four things will happen when property is disposed of. Income is realized from any gain. Gain is measured by the exchange in the dollar value between the cost basis or purchase price and the gross proceeds received from the disposition or the selling price. The tax rate that applies depends on whether the property was held for 1 year or less, a short-term gain, or for more than a year, a long-term gain. Disposition of property is reported on your tax return using Schedule D and Form 8949 or Form 4797. These forms require that you show your math when you are calculating a gain or loss. You will do your calculations right on the form per instructions. Reporting cryptocurrency activity. Virtual currency transaction must be reported on page 1 of your individual tax return. Beginning in 2020, if you are engaged in any transaction involving virtual currency, you must check the appropriate box next to the question on virtual currency, even if you received any for free, including from an airdrop or hard fork. Do not check this box if you only engage in transactions among wallets that you yourself own. An example of capital gains tax. Suppose you purchase bitcoins for $40,000. You then sell it for 50,000. So you have a 20,000 capital gain. This would be a short-term gain if you held the Bitcoin for a year or less. So it would be taxed as ordinary income according to your tax bracket. It's a long-term gain taxed at a rate of either 0%, 15%, or 20%, depending on your overall income. If you own the Bitcoin for longer than a year, all of your gains would be short term and you would report them on Form 4797 if you elect market to market trading. Many Bitcoin related expenses would be deductible on Schedule C. The net investment income tax. You might also find that you are subject to the 3.8% of net investment income tax that applies to investment income. It comes due if you are a single taxpayer and your overall modified adjusted gross income from all sources is more than 200,000 for the year. The threshold increases to 250,000 for married taxpayers who file jointly and qualifying widowers. It drops to just 125,000 for married taxpayers who file separate returns. This additional 3.8% tax rate applies only to investment income, not wages or most self-employment income. How to pay taxes on Bitcoin. Establish a record-keeping system for all your transactions and keep track of when you acquire and when you dispose of Bitcoin. Identify your cost basis method and your exchange rate. Then record the dispositions of Bitcoin on Schedule D and Form 8949. Keeping detailed records of transactions in virtual currency ensures that income is measured accurately. Normal capital gains strategies apply. You can offset gains with losses. Time your disposition to qualify for long-term treatment. Harvest your losses and harvest your gains. A tax professional can help you with these concepts. The income is reportable on your personal tax return, normally due April 15th of each year, unless you request a 6 months extension from the IRS. Because of the pandemic related complications, the deadline for filing 2020 personal tax return is May 17, 2021. What happens if you do not pay taxes? Bitcoin is no different from other sources of taxable income. If you shrug your shoulders at the IRS and do not pay, even if you did not know you were supposed to do so, first, the IRS will most likely know about your activities, or at least it can check and confirm them. All Bitcoin transactions are permanently stored in the Bitcoin network, which is public. You will no doubt receive a notice from the IRS if you neglect to pay taxes on this income. You will be charged interest at the rate of 0.5% of the amount of tax you owe, up to a cap of 25% of the unpaid balance. You will also be penalized at the rate of 5% a month as of 2020. The IRS additionally has numerous enforcement options for collection, from liens against your property to levies on your income and bank accounts. Tax tools for Bitcoin. Casual Bitcoin users might want to consider using a reputable Bitcoin wallet provider that has implemented risk mitigation tools to make buying, trading, and selling Bitcoin more secure and user-friendly. Even aside from tax considerations, investors should take a look at wallet providers or registered investment vehicles with the kind of security features that one might expect from a banking institution. These tools might come in handy both when you are handling transactions and when you are planning for taxes. Bitcoin taxes, web-based softwares for importing data and calculating gain losses can be helpful as well. Thanks for watching this video, and do not forget to subscribe to my channel.